Okay, testing, 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 testing. Let's go. Okay. Combo. Okay, good evening, ladies and gentlemen. Okay, testing, testing. We're good. Hmm? Please take the plate to the thing. Good day, ladies and gentlemen. Welcome to the evening trading the close. I welcome you all. Everyone, sorry, I have kids, so this guy, I don't know what he's looking for. The floor, it's lava. Malan, if you take, it will make him cry. Eh? Okay, welcome, ladies and gentlemen. You see, it's for Malan. I give to Malan. You want to fight with Malan, eh? Sorry, guys. Welcome to the evening stream. I welcome you all. Today, as you know, is the PM. It's FOMC, which will be 9 o'clock. Possible. We will be listening to the FOMC with you. Just trying to figure out. I'm trying to figure out if I'm lagging or not. If I am, apologies, because I don't know. It seems like I'm lagging, but oh God, I did a mistake. I might have to restart the stream. But anyway, let's get to it. Okay. Okay. Today the FOMC. There is FOMC today. Earlier on we had in the morning we have Australian CPI, which I spoke about on the video. There is a video where I spoke about it. Uh, then after we have Canadian overnight rate, but oh, Australian CPI came in hot with 3.8%. Focus was 3.5%. While month over month is 1%. Focus was 0.7%. So this will be a bit hawkish. I think the Australian Reserve Bank will be more restrictive in this case. We might not be getting rate cuts in that sense. So I'll be still lying more bullish compared to the dollar, where a dovish Fed might come through possibility of cuts or keeping the interest rate the same, given the fact that given the fact that the labor market is a bit bad. Hmm. Okay. I hate streaming after gym. So today there's FOMC meeting. Before we go into the analysis, possible getting a trade before 9 o'clock interstate decision time. We're gonna start here. Okay. Uh, Come on, man. Sorry, I'm trying to see what's happening. Okay. So, as I spoke about this CPI and Canadian thing. However, um, before FOMC, let's quickly speak about the Johannesburg Stock Exchange close. The Johannesburg Stock Exchange close, we see that the Johannesburg SA top 40, it's up 1.9%. On the top gainer side, we have Goldfield, Anglo Ashanti, Northern Platinum, Sasol, Impala, with leading the charts is Golden Fields which is up 8%, followed by Anglo Ashanti, which is up 6.4%, and then followed by Northern Platinum, which is up 6.17%. Then Sasol and Impala, they are at 2%. On the top loser side, it's a network which are leading the charts, which is Vodacom and MTN, which are all down 1.9%, 1.78% respectively, followed by Sanlam, Aspen Farmers and Investec, which are also down about 1%, with with Gold Ashanti and Anglo Ashanti leading the charts. This could be basically, let me say, the mining thing. That's because this is directly affected by the gold move to the upside, and the gold move to the upside is caused by the so many uncertainties, and that I feel like all these companies have been share price have benefited from the gold price increase. When you look at the gold chart, it's just it's just parabolic to the upside. Now we are getting a very strong it not as strong, but it looks like we are cooling down just before the Fed meeting, waiting for the decision. So I'll speak about my prediction in a few. Uh, but I feel like Anglo Ashanti and Goldfield. But let's look at Goldfield before Goldfield. Just gonna make my life on. I'm man. I'm man. Okay. Goldfield. We see this move on Goldfield, which is moving exactly like more in the same like gold. It gave a retest to that move. You could have went long there, which is a very good move to the upside. And it's up, as I said, 8% for today. And this could be coming back from the uncertainty benefiting from the gold move to the upside. While when you look at uh, Anglo Ashanti, Anglo Ashanti as well, similar move to gold. I don't know, the network is a bit slow and we are close to the time. Oh, come on, man. You can't be this slow. My piece is a bit slow today. Also, same move like gold. So this shares are literally benefiting from the gold price action and the gold uncertainties in the world, which we see a lot of reserve bank they are moving into. A lot of reserve bank are moving into gold, and if reserve bank are moving into gold, then you gotta get a move like this. That's what has been happening today. But let's speak about FOMC. Let's speak about FOMC and prediction of the FOMC. But before that, uh, let's do our daily analysis. I'll speak about my prediction. Previous daily low, previous daily high. What's wrong with Trump? Previous daily high as well. We just said previous daily high. We look to be going to this daily fair value gap here. There is a previous fair value gap here that is holding. The direct move for now, previous daily high, previous daily low, previous daily low. Between here, there is a drop liquidity lower today. I might be interested in short, but that would be short term. I will speak about my prediction as we wait for the rate cut decision. So we have a 15-minute that could be a drop liquidity. Previous daily high, previous daily low. Oh, interesting. We might get a 4-hour inversion here coming back all the way down to take out the previous daily low. But let's see. Point of reaction here. Possibility of a retest to this 1 hour fair value gap. It is there. With the 1 hour fair value gap also looks like a, a breaker as well. So I might be interested in that. Oh, come on. What did I do? It also looks like a breaker as well. I might be interested in it. Yeah. Okay, I'm gonna look for. It looks like we might get a continuation from here. Holding the 15 minutes fair value gap. Maybe there is a continuation to come to this lows. Previous daily low. Also, there is this one that held here. Can we come back to that? I don't know. I don't have any bias for now. Should I use should I use my headset for this? Okay, I'm thinking. Hmm. Okay, I don't have a bias, but I'm more like going lower. But I don't have a bias. I don't have a bias. I'm more lying that hold, so maybe if it takes out. Wabulela nini? Awuna charger mo fast. Oh, God damn. So that's what I'm looking for. Yeah. But anyway, let's look for the stream that will be checking the FOMC. Then I'll tell you about what I'm thinking. Nini fisha. Oh, I don't have a bias, honestly. I am more like bearish, but I don't have a bias. I don't have a complete bias. Okay. Still pushing to the upside. I honestly don't have a bias. That's why I'm sitting on my hands. I truly do not have a bias. Chiefs won! Chiefs! Sorry, I'm also watching football. Let's open for AFMC. I'll tell you my prediction as we open for AFMC. Two. I'm checking for the FOMC stream. I don't have a bias. That's why I'm sitting, just sitting. Okay, we're still not live yet. We are still not live yet. When he comes in, we're going to determine if 3 minutes before FOMC, I'm not going to be taking a trade. Yeah. Okay, let's pick. So for me, we are in two ways. If so, now it will all determined by what Powell say. If he says he's lying more dovish in terms of saying he believes that the Fed will stay. Okay, here's my thoughts. My belief there won't be any interest rate cut today, unless there's any surprise thing. But there won't be any interest rate cuts today, which means if there's no interest rate cuts and they're coming from the labor market, it's a bit constrained. The labor market is a bit of a problem. However, also inflation, they are watching the two. So if they cut interest rate earlier, it might cause a problem with inflation. So in this case, the Fed might decide not to cut rates. That is why I am saying personally, I am not really bullish or bearish. I am staying clean in this crazy market. I am not even gonna attempt to say I'm gonna be bullish or bearish, but I'm lying on long term saying the Fed won't cut rates, for which I'm more interested in selling the dollar as a currency. So I'm gonna be sitting put, doing nothing. As I said, it all determines by the Fed's decision, but looking at the labor data, looking at inflation, and if we want to go through that before the last 30 seconds, okay, 30 seconds before the Fed's decision, let's see what happens. Let's move this here. Let's see what happens. I'll let you know now. What happened here? Come on. 10 seconds before the move. Let's see the market. Let's see the market movement. Remember, I'm sitting on my left, so I have no bias. The first direction is to the downside. Interest rate decision. A move lower. And I'm getting notification that it's been kept the same. The only reaction we got, it's a move lower and a rejection. And this is because the Feds have already priced in for this move. However, now we wait for the biggest move. Sorry, I'm a bit, yeah. Sorry. So now we wait for the FOMC meeting. Meeting minutes, which press conference, which will be a good direction of where we are going next. And depending on how the man decides or he sounds. So if he will sound very dovish or constructive, we'll see about that. The first reaction move is to the upside. The first reaction move, I'm gonna mark that above as a drop liquidity. So the first reaction move is to the upside and rejection again. So there's nothing happening here. We're gonna wait for the FOMC meeting now. While waiting for them, let's speak about our prediction and the price that we'll be looking for. For now, I'm just sitting on my hands. Let's wait for the presser. And immediately after the FOMC minutes and press conference, which will be half past, we will look into taking a trade. Okay, can we get a trade here? Let's see. We kept that high. Let's see. Nah, there's no trade for me. If we get a closure below, I will love S&P 500 though. If we get a closure below, I'll attempt S&P 500. I'm waiting for this 5 minutes closure. If we, oh, look at that. The first reaction, it's market going lower. Oh, God. Wow. Okay, let me explain. So this move might be coming in for the fact that if we keep the interest rate the same, we might not cut interest rate. So the market is saying, look, it's not a huge move, it's not a small move, but we are in between saying that, yeah, we're not going to get rate cuts. Borrowing will be a bit of a problem because a bigger move might be worth Russell because small stocks are mostly affected. But the market for me, it is already priced in. Look at that. It is already priced in for this move. So it is already priced in for this move. We are just waiting for the press conference. Just waiting for the 5 minutes closure. Sorry, I'm a bit, yeah. Let's wait. But anyway, yeah, as I said, no red cards. The only reaction we could get market both already priced in a very bit of volatility back to the up to the backside, up and down, and nothing happens. And long term, no interest rate cuts. It's all about how Powell will sound, as I said earlier. Possibilities they will say no, we're gonna delay rate cuts. We're looking at inflation. Yes, the labor data is a problem. We are closely monitoring the labor data, but our overall direction will be looking to keep rates the same. If cuts maybe will be on the second quarter. I might not say that directly. That's what I'm predicting. But let's look into the hedge fund now while looking at that as well. I'm waiting for this 5 minute closure. Close below there. I'm gonna start to look for positions, but oh, look at that. I don't like this close. I'm not gonna look for a trade. I don't like this close. Okay. On the bullish side, we have the Aussie dollar, the Aussie CAD, Aussie JPY, AUD/USD, and I told you I'm very bullish on AUD/USD. We have GBP, AUD/USD. Oh, look at China 50. I'm more interested in China 50 right now. On the bears, come on. On the bears, we have Euro AUD, very strong bearishness. USD JPY is still bearish. And as I said, no rate cards. While we have Aussie dollar, which inflation is it's quite high, that might be lying more into the bullishness of the Aussie dollar against the US dollar. So I'm just gonna be sitting put for now. But let's look at these are the only thing that are bullish and bearish. Oh, come on, man. But let's look at overall movement. Let's look at overall move. Drop liquidity will be this daily low, but let's look at the overall move. S&P 500 is still not part of S&P 500 is bullish, but I'm gonna wait a bit before I jump into any indices. Any indices. But depending on how it sounds, a lot of things might change here. But I'm more interested in forex in AUDUSD. Look at that, it's still very far. Quite far as well. There's no trade for me. It's overstretched. I'm looking for bigger retracement. Still quite far. USD JPY for the bears. We see that we're just starting to reject. Can we get high enough? Perhaps to the 61.75 area. Perhaps I'll start to look for a trade around the 38 area here. And then I must start to look for a trade. If not, then I'm good. I'm not gonna look for any trade, yeah. Just gonna be watching it. Aussie dollar overstretched as well. Can it come back to this low? I don't know. Oh God, this thing's annoying. GBP AUD. I think the market is overstretched, man. There's nothing that directly you're gonna get. Yeah, it's not looking good. Ooh, look at that. Euro AUD still continuing. I thought we were gonna get much a deeper move. Perhaps I was gonna have tempted it, but there's no trade here. Not all the pairs that I'm looking for. Uh, okay, maybe this one. Okay, might attempt British pound CAD. I might attempt British pound CAD. Yeah, yeah. But another one that I'm looking closely, I've been watching closely, is China 50. China 50 has not done what I'm looking for. For those that have been with me, they know what I'm looking for China 50 now. Yeah. Just still not come back, take out that high, and look for a continuation. Until it does that, I'm not gonna look. I'm not gonna look for a trade. Yeah. Wait, I'm still watching. And then yeah, I think on the NZDJPY it's overstretched as well. Okay. My new entry point. Where was I watching NZDJPY? Sometimes I become very delusional, eh? Gonna wait for that move as well. Then AUDJPY, still nothing, yeah. I have nothing much. Okay. So far, there's nothing much. Russell, it's a bit bullish, but I'm still gonna wait outside for indices. So let's look for the trading opportunity, man. Still look for that biggest support, but let's look for trading opportunity. There's nothing much. All the markets are over a bit stretched. I'm still waiting for the 5 minutes closure below the low. If that doesn't happen, if you get a 5 minutes closure below here, definitely I'm gonna attempt my luck. Should have been nicer if it has taken out that high. Maybe it will hold this one. Let's see. Well, I'm not gonna look to trade now. There's nothing at all. So there's nothing much happening. Still waiting for the FOMC. As I said, I don't have a bias. Holds that, come take out that low, maybe. Press conference has not started. How will be the deciding factor here? Firstly, it held at 5. Can it close bearish, maybe? Give me something before the news. Hold that, come close bearish, yeah? Still gonna watch. I think the press conference will be the deciding factor, yeah. So far, I prefer the move that's happening, yeah. I love the move, even though I want it closer below, man. I don't like this price section. I'm gonna be watching on the 5 minutes. Yeah. The move is not happening, man. Nalanda, what's wrong, Nana? Stop what you're doing. It's not happening, man. Mm, 100%. Ah, come on. Let's see. First below. If you are brave enough, you could look for this 1 minute further look up below. Listen. I'm not taking this trade yet. Let me try it before FOMC minutes. Oh, come on. You move too fast. Let's see if I can go in. If it's gonna move without me, it's fine. Come on, man. This thing might live without me. I'm not. I'm gonna be honest. A bit slow for my liking. I was a bit slow for my liking. I was supposed to be on this trade, so it might live without me. Hoping it will still give me that retracement I'm looking for. But I was extremely slow. Yep. It is going. I hate this. Me, I'm extremely slow. Ah, man. Come on. Ah, shucks. This is annoying, man. Okay, that's it. Missed another trade. If you want to trade, congratulations, man. Could move your stop loss to break even already. I missed it. Let's see how this 1 minute flows. But I missed it. No two ways about it. I was very slow. The new meta traders annoying. I wish I chose oh, I'm not tagged in yet. Very close to my entry. If it rejects without me, I guess. Another trade miss. It missed me the other time. Oh, come on, man. The spreads. So now I'm not on the trade because of spreads. Should be in now. Yeah, I'm on a trade. Okay. Very aggressive move to the upside. Tapped on the 1 minute for value gap. Just move this slightly. Just slightly higher. Ah, so just trade does not look good. Yeah, the trade won't look good. Should be out. Yeah, I'm out. That was a very quick move. I'm out. Hey, okay, I'm out here. This is what I was avoiding. You want Nancy? Oh, shucks. Look what I was talking about. I said I was looking for a 5 minute closure below. What's it? Oh, made a mistake. I blame myself, yeah. I said I was looking for a 5 minute closure below. Came, didn't give me a 5 minute closure below. I just jump on. I have myself to blame today. I can, it was a trade that was avoidable. Loss that was avoidable. My mistake, yeah. Yeah. Not be afraid. I'll give you Malan. You want it? All right. Check. I told you, it's not a good boy. This thing. It's not even- 1%. I'll give you pineapple. It's mango pineapple. Yeah? Yes. I told you, Nana. But it's a small boys. It's a small boys. What the hell, innit? I'm saying. This one, yeah, pineapple. Okay, let's see the gentleman if it's coming. Sorry. Okay, still not here. Made a huge mistake, so I'm gonna wait out until then some damn move. The man is coming after taking me out. There's some damn move, man. Okay, let's see how we move. What's happening? Okay, let me do this. I don't have a good sound. The sound is terrible, man. Oh, I'm gonna check. I'm just gonna quickly also check the audio. The sound anymore. What's happening? Oh shucks. What happened to my sound? Eat pineapple. I'll give you more. I'm coming. My kids is a problem now. Give me more. Let me eat it. April. What estimate? Come give JD a high five. Then come stand there and say hi. Hi. There, say hi. Hi. We don't have the audio. Hold on. Oh. Wait, Chompa.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi.
Watch TikTok. Watch the other one.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend.
That is why we get gold to be moving to the upside, because of what this guy says. This guy starts saying a lot of things. That is why now we have these things moving to the upside.
I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid, and what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in, which suggests
I've
some
already
signs of
taken a loss
stabilization. I
this
wouldn't go
afternoon.
too far with that, but some signs of stabilization. There are also some signs of continued cooling. And
Watching
so
this
we
high.
thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and
Maybe I have to
that should
hold this
matter
against
for
the
labor
figures,
demand
yeah?
and for
why
employment
I'm watching
over
that
time.
time.
So for those two reasons, we thought we would take that language out of the statement.
Nick.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
He doesn't want to comment on the case and the politics of Trump. Interesting. Let me
Michael
see,
McKee
Russell.
from Bloomberg Radio TV. Have you made a decision on whether you would remain
Russell
as a
came out
governor
to retest
of
the
the Federal
50%,
Reserve? And if
yeah.
so, would you tell us what it is?
And
And
you
if not,
rejected.
when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today, that either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm, there's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might,
Do not forget to subscribe,
lead to a
guys. and like
similar
to-
answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have
Interesting
you been
question.
at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
But, I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
I will call you.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our
Sorry
goal
about that.
variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are actually
there's no more
below
fearless
there on
to
their
switch?
long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by one, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. You know, it's in the eye of the beholder, and of course no one knows with any precision. Is that, you had a follow-up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the S&P from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Always, this man is just politically correct. Always.
Thank you, Chair Powell. Mara Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether.
So basically, the voting people are still split. There is people that are for rate cuts. So now starting to say it's about the labor market, but it's staying neutral, but it's split as well. So the possibility of rate cuts next quarter are there.
Employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
Good question.
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does
they
that
are
look
more
like? How
like,
would you work with that person, and what does that transition period look like?
rates
I
in a
don't
long
have
term,
anything
not now.
for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place.
Look at this move.
I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
So, look, so inflation is not a major, it's still a big thing, but it's not as big as we're thinking now, because according to their forecast, it's consistent with the 2% target. There's no projection to skyrocket to 3%, 3.5%, like what the Oz is doing. So solid. CPI consistent. I mean, CPI is inflation is consistent within 2 to 2.5. Possibilities are they're going to cut rates.
Both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. Yeah, so we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Okay. So it looks like
Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
You know, over time, you've seen that U.S. rates have remained pretty, they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, you know, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But you know, right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that, you know, in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. You know, the thing is, I mean, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not, and it's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but, you know, it's much more, you know, assessments of the fiscal path and fiscal policies and risks and things like that that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So it's not, there's not a tight link between, you know, 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between, to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, you know, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, you know, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market.
So I'm going to wait for him to finish speaking.
So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, growth is on a solid footing, it looks like, and it's not just those things. It's just the consumers. The consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and So
Just
we
jump in
do
again.
hear a lot about affordability, and we take that very seriously, and we take it to heart because, you know, one of our jobs is price stability. And so, you know, the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, you know, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
You know, so everyone, of course, is watching AI and the deployment and, you know, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different, you know, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. You know, we can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, you know, is your expectation still for inflation to start cooling in the second half of 2026? And you know, if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening
The
remarks,
first loss for today was
3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, you know, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But, you know, we'll be able to see whether things are moving in that direction. I think, you know, we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. You know, geopolitical risk for us
Not
is
looking good for our
a lot
trade.
of it is around energy, oil, and so far we haven't. You know, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. You know, longer than that, it's trade, and you know, the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5
don't like
handle
this
on
question
it
for my trade.
as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but you know, it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but you know, there's growth and there's how fast the potential is growing, and at a time of you know, high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. You know, GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. You know, it was more in the mid-twos for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
I don't think my trade will hold.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
He's not going to answer this question.
Honestly, I'd say a couple of things. One is you know, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, you know, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative.
If this has already failed, comes up, break that above, turns out to look for continuation to the upside. But the trade is not going to hold anymore. I've already taken a loss earlier.
Our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind, Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, you know, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happening now with AI, we're all over that. And everyone studies those periods, and we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
The man is done. Okay, the man is done. Okay, let's pick the market while waiting for my trade to happen. I'm still holding on a trade for the last few minutes of the power hour. Oh, okay. Let's pick the market. Let's see what's gonna happen, but I've been looking for always. Oh. Let's wait and see how this trade will fall, how the trade will unfold. That's consolidating in one place. Can we get, if it gets a move up, I'm gonna be out. Lower, with about 10 to 15 minutes before anything changes. I doubt the trade will hold. Oh, come on. Trying to. The trade does not look to be holding, let's say, gentlemen. Ain't gonna lie to you. I do want to show you my possibility of going for trades. Possibility of my long trades. And explain them. What happened here? I'm not gonna kill it. Even if I end the life, I'm gonna hold through it. What the hell's happening here? Yeah, I'm just waiting for my account to open on the swing positioning side. What's this? This account is closed, please. There's no good there's no any move either way. Okay. Just consolidating, very annoying, I should say. Okay, the trade is not looking good, as I said. Okay, I'm just looking here for something. Come on, man, do something. Honestly. Okay. Your battery was stop loss.
It's like this.
Okay.
It's 50%.
All right now. You going to sleep?
Daddy,
Hmm?
what I'm telling you.
Okay.
You watch anime
No.
with Messi? How many percent?
I don't know.
It's one.
What?
It's 1%.
No. What do you want from my watch?
How many percent?
Trompo.
How many percent?
There's no percentage.
How many percent are you in your watch?
My watch is fine.
It's 2%.
No.
1,
No.
0,
15.
15.
Yes.
Mm. This was what?
Yes. Told you, Trompo.
Okay.
Don't bring Botlelo again. I'll have loved the continuation lower to give that as a fair value gap. Come here. Are you really gonna drink that? Come on, stop drinking. It's gonna be hot. All right. I love the move. I'm waiting for the closure. Malanda, what do you want? Malanda, oh, Malanda. What did Tompo do? If you're brave, you can re-enter this. I think this will be a good trade. I'm not gonna re-enter though. I guess it validates my trade. It validates my current trade because you could look to entering here. I'm not saying I've entered this, but I've already entered a single trade, which I've entered a bit far. But this could validate my trade as well. In fact, this validates my trade. Yep, that validates my trade. Breaker, yeah. Yeah, this validates my shorts. So even if I take a loss here, I'm happy. It's validated now. Yep, it's validated. Okay, I'm happy with a short, yeah. Okay. I'm not gonna add more, but reason being is that I've already taken a loss today. So yeah, I'm gonna hold on. Are you finished? I'm gonna always give you Naswa spicy until you stop drinking. I'm telling you. And I'm never giving you my phone ever again. Don't come to me for my phone. You finished. Trumpet. Don't talk to me. I don't care. I don't care. Don't tell me. Don't tell me anything. And stop screaming and you're making noise. I told you not to drink that thing because you're old. You continue drinking. It's too late. It's too late, Moran. Moran, you hurt yourself. Get to this law. I'm gonna move to break even and start watching it from afar. Malang, no. Yes. I'm not gonna reduce my risk. I'm still waiting for a break below this low. If that happens, maybe I'm gonna reduce my risk. Maland, I'll get you one. Come. Bring your bottle. Bring your bottle. Hmm? Where's your bottle? Give me your bottle. Not that one, yours. Yours, Malanda. Come on, okay. What? Yeah? What do you want? What do you want? Malan. Is it the one nurse? Where's nurse? What do you want? Trump, can you? Where? You're lying. You're lying. Take. No. Look, look. It's not. Come sit with this. Come. What do you want? Huh? Okay. Market is closed below the low. I'm gonna move my stop loss to break even. I'm gonna put it here for now. Let me see. It's not break even, break even. I just wanna see the next few candle. If we get a continuation lower. Malanda, what do you want? Wait. Papa, can you put something for Malanda? The floor is now. Put something, put the floor is now. Matomo. So I hated that rejection. Come bring the motor. Look, look. Okay. Trump, put the other floor is lava. Bring the motor here. Trump, bring the motor here. Trump, bring the motor. Yeah. Yes, lovely. Wabona matata. Still on a trade. Look, for me to break even, I decided not to put in on break even because I just wanted to see what happens with these few candles. Uh, the most active break even point, I guess, would be this low. This low. If it comes close below that, I'll be happy to move to break even. But I don't know where the power hour will be taking us. The power few seconds of the day before closure. Will it dip down, closes below, and we can shut it down? Or it will take me out? To be fair, the stop loss is just above here. Just to set it up properly. Yeah. He wants Chacha. Trump Marashem. He said he wants Chacha. Trump, he said Chacha. Then why is Trump manipulate Manan?
Yes, Malanja. You want this one? Yeah? Yeah? Yes.
He said he wants Chacha. Bring remote. Bring here. Then don't ever do that. Then do it.
This one. Oh.
Trump, can I have the remote? Sorry, guys. I'm with my 2-year-old boys.
Yeah.
Still a good move lower. I'm still wondering if we can close below here. Yeah, the low still intact, eh? That's low. Okay. Still holding on. Trying on to log on my other profile. Yep. Correct. Look, it's not supposed to go back to break even, but I'm just gonna wait, man. Come on, close below, man. Okay. I'm waiting for this 1 minute to close. If it closes below, we're gonna move to break even. Okay, let's just move to break even. There's no need to hold on to this. I don't want. You've been drinking milk while I said stop drinking milk. I don't want. Trump, I don't want. Didn't you drink? Then I don't want. I don't want. Okay, shut. I'm busy, Trump. My stop loss at break even. Trumpo. You're making noise. Oh shucks, I didn't see that. Where was I? I wanted. Oh shucks, I wanted to close the market. Yeah. Oh shucks. Where was I? Look at me looking down. It's gonna take me out on break even. Let me see. I'm gonna reduce my take profit here, but it's not gonna hold. Oh, flipping hell. Stop shouting in Malanda. Okay, ladies and gentlemen, I'm going to call this a day. End of the day, I'm not going to do anything. Oh, I've reduced my take profit to here. Even though I don't think it will come back to take profit this time. Okay. Ladies and gentlemen, let's do something else, something important. We'll discuss the rest of this thing tomorrow. Remember, I said I was looking for. Let's stop this. This trade is still on. I'll let you know if anything changes. Okay, break even. Break even. So, oh God. Okay. After FOMC. So after FOMC, there's few things that I'll be looking for. Let's discuss it. As I said, Powell sounded more like they'll still remain restrictive a bit. And we had Trump, you're making noise. It's 12 for Trump. Trump, you're making noise. Trump, hey. Okay, sorry. Christ. So where was I? I was saying after FOMC, earlier on yesterday we had CPI in the morning, and we have seen CPI moving. Oh, look at that. Yeah, and then we have seen CPI in the Australian CPI. It came out hot 3.8. Oh, it's not like, yeah, but it came out hot 3.8. I'll show you now. Economic heat map. So here, Australian one, today we had CPI, which came in hot. What was expected was 3.8, forecast was 3.6, and came out at 3.8. That alone for CPI in Australia, it says the Australian Aussie will remain bullish. And then obviously because now higher CPI it means the Reserve Bank still has to remain very restrictive. They might not cut rates because inflation is going somewhere else where they're not even looking into, which they might keep the rates the same. But if it continues with this uptrend, then from there you might have for them to hike rates. So that alone makes me be more interested in looking for Australian dollar against the US dollar. Against the US dollar, where the US dollar, after the FOMC minutes, you have Paul sounded a bit relaxing, sounded that we gonna cut rates eventually because of though, and he also mentioned that inflation is stable. It is not far away from their target of 2% and does not look to be parabolic towards 3%. So far it's still stable. There's nothing much I can say about it. It's still stable. So therefore, with that stability, with the stability of it, um, then rates might be cut to save the labor market. So that's why I'm showing you this. That is why after what he said, I am more interested in taking the Aussie dollar. But for the Aussie dollar, I will have to look for a way deeper retracement. Look at that. It continued going. I think this is, let's see if it happened immediately after FOMC. Yep. Yep. As expected. Yeah. FOMC happened and continued because inflation is high in Australia. So that forces the Aussie to still remain very restrictive. But with the restrictiveness, and remember the dollar, the Australian dollar, still very strong. But please, I'm busy. No, don't tell me.
Where's your phone?
I don't know.
I put in your pockets.
I'm gonna look for a very deep retracement to look back to the upside. So I will be watching it very closely. With a retracement close to with the retracement close to that 38% mark, but I'll be more interested as it comes back lower. Now it's overstretched, but I am very bullish for Aussie dollar, Australian dollar against the Australian dollar against the US dollar. I'm very bullish for that. Uh, Currently, the one that maybe it's looking for something and it's looking good, to be honest. It's not overstretched because this dollar weakness, honestly, the dollar weakness, it's a bit of a problem because you have this dollar that is extremely weak. Friends are sounding very optimistic that we might get rate cuts maybe before Powell leaves as a chair, because there's about 2 meetings left before he leaves. We might get rate cuts, and then you have this parabolic move against the dollar. If you want to buy your Aussie, you want to buy anything, then very aggressive to one way or the other. But things that are looking good and are clean, GPP against the CAD, it is another one that is it's a bit bullish. Um, if we were to look at British pound against the Canadian dollar, it's still bullish. You can even look at the fundamentals, but I know that the British pound is a bit strong compared to the CAD. Against the CAD in this case. So we need to look into buying it. I'm going to just look at the technicals with you now. Perhaps we can get something maybe here and we can set up the limit now. So this is a move that I'm looking for. Hold support, mark, take out the, that's fine. So I'm going to look for this move. Okay, let me put up. Stop loss went to hit my take profit. Let me see something, sorry. I was on a trade here, so I'm seeing something here. I just got distracted. Did I rush the move? Oh, come on. Anyway, so the one that I was saying, I was on a trade here, so I'm just saying this move. I was on a day trade. I was on a short, took a loss earlier on, then I took a break even, and now I'm seeing a very good move after taking me out on break even. But anyway, as I was saying, I was speaking about GBP CAD. It is bullish. The British, the GBP CAD, the British pound, it's a very strong pair compared to the Canadian dollar. And I think not to waste a lot of time and not to mumble a lot, because I tend to mumble a lot, it's easy for me just to go to the economic scanners. If you look at the echo scanners, which will give put the chair away. Stop using that chair because you're fighting now. When you look at the bullishness of all the currencies, as expected, Australian dollar strongly bullish. New Zealand, the Aussie, Japanese yen is one. Look at that. British pound bullish against the CAD, which it's weaker than even the dollar itself. So yes, I'm more interested in that. Tom, get out of there. Tom, you guys, you'll hurt each other. All right. Tom, follow up. Sorry guys, I told you when I'm with kids, I'm recording while with kids, and I'm not gonna start over and over again. That's how my content will be like. So that is why I'm gonna look for longs, and I'm gonna set it up now. I'm gonna set it up now. I'm setting it up now. Wait, is a bit far. Just different. Oh. Just setting up a trade here. Trump, you want to hurt yourself, ne? Don't tell me. Don't. What's happening here? I'm struggling to set up. Guys, I need to deal with someone now. I'm not gonna end the live. Trumpo, stop using that chair. Oh Christ. Okay. Um might have to, okay, like guys, as I said, I'm gonna look for this long now. I'm gonna set my limit on my own because I'm fighting with my kids and I'm gonna deal with him now. So sorry about that. So I'm gonna look for this long. On the others, honestly, they are overstretched. So the okay, also this one, I am closely monitoring it. I'm gonna look at that. That's going after FOMC. Look at that, but I'm gonna add my limit as well there. Those are the only ones, GBP and NZD, because of FOMC. Those are the only one that are decently positioned for me to get a long trade. Okay. Other than that, thank you so much for joining me today. I took 2 losses. For those that have been here with me on the stream, look at that. Immediately after taking that break-even trade, this guy just tanked immediately on close, market close. The position just came through and it just went all the way down. But thank you so much for joining me. If you're watching the recording of what I'm looking for, Also check out Facebook on link in the bio where it's more like of my newsletter of what I'm thinking. Other than that, have a great day. I love you all. Peace.